Hi, my name is Derrick Brown, and I'm a former banker like many of you today. So if you come out of the banker or credit union space, I have a message I'd like to share with you today. Before I begin, let me share just a little bit about myself. I was a banker for 27 years. I had the privilege of working with quite a few number of banks, but the main bank that I worked for was a bank called Wells Fargo Banks. And we were a bank that was called United. We merged with a really solid bank out of the Midwest called Norwest Bank that came out of the Twin Cities. And then we became Norwest Bank, and then became um, Wells Fargo. And that's when my career really shot off. So before I left, I had a title that was a senior vice president. I ran 8 states for the Rocky Mountain region. And back in those times, and I left the bank back in 2007, and I can tell you that back in those times, it was popular to have mentors. Mentors were people that would take you under their wing and help guide you and help you navigate the turbulent waters of upward mobility within the company. How do you become successful as a banker? Well, a lot of you listening to this video today, you can agree with me that in banking, you had to become what we would call a triple threat. What's a triple threat? You had to learn credit, you had to learn management, and you had to learn sales. And if you could master those three, you could run a bank. And therein lies the opportunities. But one thing that has hit in that whole space of the financial industry as we know it today, it's under constant change. And one thing I've learned about bankers, yes, we have to pivot. I had to do that in my career of 27 years plus. But what do we pivot to? Well, we pivot to go to another bank and another bank and another bank. And there's an old saying that if you keep doing what you've been doing, you keep getting what you got. But one thing I also learned, because I was always what I considered an entrepreneur by, just in my DNA. And by the way, we don't use the word self-employed. I'm an entrepreneur. And I'd like to share with you why bankers underwrite and brokers triage. We're going to talk about that. But before we begin, I just want to say, get your notepad out. Take time to listen. Give it some consideration. And there's another saying I'd like to share with you. If you change what you believe, you change what you do. So let's begin. So, all things considered, why bankers underwrite and brokers triage, and why the difference matters. Let's talk about that. So, once again, my name is Derrick Brown. I spent 27 years at Wells Fargo. I launched an independent loan brokerage called Alternative Funding Partners. I founded the Commercial Loan Broker Institute with 2 other partners. And in that timeline, helped hundreds of brokerages grow coast to coast, as well as help finance businesses. And you all know too, no matter what, when it comes to business, a business today, there's 33 million around the country. Well, you know too, as a lender or a banker, businesses are either borrowing money. Well, truth be told, they should be making money, but you're either borrowing it, making it, or selling off equity. The problem, as a banker, you're working twice as hard. You're working twice as hard to lose deals that you should win. You all know what I'm talking about. Been there, done that. The banker's trap. When you leave the bank, you bring the banker habits with you. And we're living in times now where a lot of banks are merging, closing, and a lot of pivoting going on. One of the most expensive habits, deep underwriting before you know if the deal has a path. That's one of the expensive habits that I used to work hard to get out of. The banker approach, as I know it, you know it, we underwrite first. We dive deep into the financials. That's the first thing we look at. We do a full credit analysis. We do a detailed memo, aka a pre-flight. We present it to a committee or to to your business banking manager or the senior management team. You know what I'm talking about. You've been there. Then you find out it doesn't fit the box. It fits the box, but the bank has to pivot too because times have changed. Interest rates has changed. Inflation has changed. The market has changed. What is the cost to you? What this costs you is days or weeks of unpaid work, frustrated clients waiting for answers, dead deals you could have redirected. Think about that. Zero income for all that effort. Wow. The broker approach, triage first. Number one, a 10-minute qualification, which we call a quick assessment of key factors. Number two, quick path assessment, identify viable lending options. Number three, lender match, connect the right capital source. Number four, fast yes or a smart no. How brilliant is that? A fast yes or a smart no. You get an immediate direction for your client. Then deep dive only on funded deals. Yes, that's how it works when you triage first. So the 10-minute triage process, you ask these key questions first. What's the money for? How much capital is needed? When do they need it? What secures the loan? Any issues or concerns? Coverage math, does the cash flow support the debt? That covers the math component. Exit repayment, how does it get paid back? How's my loan going to get paid back? Isn't that what we were taught in Banking 101? Constraints, any deal breakers lurking? The total time in that whole process in the broker triage is 20 minutes. What triage tells you? After 20 minutes, you'll know, is there a path? Can this deal get funded somewhere? What's the likely structure, the term, the rate? Or how about this, the collateral requirement? Which lender type? Bank, credit union, alternative, specialty, other? Is this worth your time? Should you invest more resources here? So let's think of it from a shift perspective, banker versus broker. The banker underwrite deeply, then qualify. Yes, you guys do a lot of underwriting. There's a lot of protocol that comes with it. On the broker shift, triage quickly, then underwrite. A real example, here's the banker approach. You have a client that comes to the table, referred to you. They need $2 million equipment loan. You spend 3 days building full credit package, roadblock, client's credit score is 580, the deal dies. They don't qualify, they're denied. On the broker approach, 20-minute triage reveals a 580 score, redirect to alternative lender in 24 hours, deal funds in 2 weeks. Approved. Why this matters? As a broker, you don't get paid to analyze. You get paid to close. Triage protects your most valuable asset. I don't know about you all, but my most precious asset today is time. You don't get that back. The banker mindset at the bank, a thorough analysis equals a good banker. Well, you're diligent, you're risk aware, you're institution focused. Think about it, diligent, careful examination of every detail. Cross all the T's, dot all the I's, you know. Risk aware, identifying potential problems early. Institution focused, protecting the bank's interests first and foremost. That mindset will bankrupt you as a broker. Brokers don't look at it with that mindset. The broker mindset, speed equals success. Efficient, client focused, deal focused, fast decisions, quick action, serving the borrower's need first, getting to a funded outcome. You move fast so your client wins. And in our world, we still think of it as time kills deals. What bankers miss? Bankers think, I need all the information to make a decision. Brokers know, I need enough information to know where this deal can go. That's the beauty of it. The marketplace advantage, the banker, one credit box, deep underwriting to see if it's a fit. The broker, 100+ lenders, quick triage to find the right box. You're not trying to approve the deal, you're trying to match the deal. Triage equals respect. Fast triage shows clients you know your marketplace, you value their time, you can give answers quickly, and you're a deal maker. Think about it. Deep understanding of lender landscape. That's the marketplace. No wasted effort on dead-end paths, because you know it's a waste of time. Decisive direction when they need it, not a gatekeeper slowing things down. We don't work with gatekeepers, everybody. We work with direct check writers. Yes, direct check writers. When should you deep dive? Only underwrite deeply when the triage shows a clear path, you've identified the viable options, the client is committed, they're ready to move forward, the lender is identified, you know exactly where it's going, you have a mandate, fee agreement, your compensation is secured. Never before, broker success formula. This is our success formula that we use in the marketplace. Triage 10 deals, for example, in the time it takes the bank to underwrite one deal. Identified 3 viable paths from those 10 opportunities, close one deal, and generate revenue. Market equals profit when you're using the triage concept. What you're really selling, bankers sell loan products. And yes, there's a cadre of products that the banker could sell. Brokers sell speed, certainty, and outcomes. We sell loans. Triage is how you deliver on that promise. The trap, don't fall into the free consulting trap. When I was a banker, wow, I fell into that free consulting trap because people shop, shop, shop. Client calls with the deal. You spend days analyzing. You present the detailed options. The client takes your work to their bank. You get nothing. So after all that work that you did, that client takes their deal back to their bank and say, oh, this is what Derrick Brown was able to do with me at ABC Bank. Can you match it? Some banks do, some banks don't. But after all that work, that's the way the game works. So protect your time by following the right sequence. Number 1, free triage, 20 minutes of your expertise. Number 2, client contract. If the deal has a viable path, you want a secure contract. Number 3, placement and support. Placing the deal with a well-fit lender speaks volumes, gets you a lot of traction. Number 4, success fee. When the deal closes and funds, you get paid. Triage is free. Deep work requires a client's commitment to pay you for success. Build your triage muscle. This skill takes practice. It doesn't happen overnight. First 50 deals, you'll overanalyze and second guess yourself. The next 50 deals, you'll start to see the pattern emerge. After 100 deals, triage becomes instinct. That muscle memory pops back in. You'll know in minutes. The faster you triage, the more you earn. The bottom line, you underwrite first if you're a banker or thinking like a banker. If you're thinking like a broker, triage first. Now you're in that broker mindset. One makes you a great employee. The other one makes you great money. Remember, at the bank, I was paid to be careful just like you. As a broker, I'm paid to be fast. Fast and consistent. Some of the key takeaways I'd like to leave you today. Speed wins. 10-minute triage beats days of analysis. You know, I'm reminded when I was in credit analysis training, I thought, man, now I see where they talk about the analysis of paralysis. Because I had to go through that process. That was the protocol. But speed wins. Match, don't approve. Your job is finding the right lender. Protect your time. Only deep dive on qualified deals. If the deal's not a qualified deal, you keep it moving. Get paid to close, not analyze and consult for free. You don't do that as a broker. Final thought, your banker training taught you to dig deep. Your broker success requires you to scan wide. Triage first, underwrite later. That's how brokers win in our world. Want to master the habits of top loan brokers? Oh, we have a list of them. Join our newsletter at the Commercial Loan Broker Institute. Learn the frameworks that turn banker habits into broker wins. Once again, commercialloanbrokerinstitute.com. Thank you for your time, and I'm looking forward to meeting you personally.